Hello, Accounting 2 students. Welcome to the first video of the year. I kind of started this video process halfway through last year with the stacked Accounting 2 students, and I think it worked well. I do want you to remember that I'm right here in the room with you, so if you have questions, stop the video, let me explain it differently, whatever the case may be. But I hope this helps us to be able to get the instruction part when you need it, rather than having to wait and move and coordinate with the Accounting 1 students and that kind of thing. But just remember, you're not completely on your own. You're just getting the video part at your convenience. And like I said, I'm right here in the room with you, so be sure and ask questions when you need to. Okay? We are going to start out this year with a reinforcement activity in the Accounting 2 book, which the first 4 chapters, the first couple of chapters in the Accounting 2 books are mostly review of a lot of the transactions that we did later on in Accounting 1. Chapter 3 is a payroll chapter, which we'll actually skip completely. We'll do a little bit. I'll give you the notes page from Accounting 1 for that payroll journalizing. And then chapter 4 we'll actually come back to later. That one's a pretty long chapter, and it deals with all of the financial statements. But there's some things that I want you to learn before we come back and actually do that, because they want us to put those accounts into the financial statements, but you don't really understand where those numbers are coming from. So I want to go through the chapters that help you understand what those numbers are, and then we'll come back to chapter 4. So we're not going to do the entire reinforcement activity. We're just going to basically do about half a month's worth of transactions, just kind of get you back into the groove with what accounts are being used, what are the normal balance sides, the debits, the credits, the increasing, decreasing, and all that good stuff. So we're going to go through and just kind of take some notes. So if you want to get some notebook paper out, then you'll have that to be able to work through this with. In your working papers, we are working with Reinforcement Activity 1. It actually starts with the ledgers a little bit further back. Okay, page 187. You can see that. There we go, 187 in your book. But I wanted to remind you first about the special journals. Remember that we have these special journals. We didn't start the year out like that with Accounting 1, but we did finish with our simulation and that spring semester using the special journals. So we'll talk about each of those, but just to remember what they look like, we've got purchases, and then cash payments. And remember, they all have different kinds of columns. It's kind of nice because it pretty much tells you whether it's a debit or a credit. Your sales journal, your cash receipts journal, and your general journal. Okay, so purchases, any purchase that we make on account will be purchases journal. Cash payments, anytime we make any kind of cash payment, mostly checks. Sales journal, anytime we make a sale on account. Okay, so remember the on account part. Cash receipts, anytime we receive cash, so we receive a check from somebody, or this could also include our cash register, okay, our terminal sales for cash and credit card sales. And our general journal is anything that doesn't fit into one of those others. Okay? All right, so we'll write that down here in just a second. We also then we'll do the posting, so we'll use the ledgers. We have our general ledger, okay, which will include every one of our accounts that's in our chart of accounts, okay, in that order. We also have accounts payable and accounts receivable. Now for this, remember that we always have to post that one twice, okay, because you do have your accounts payable ledger and your accounts receivable ledger. So we'll post individually our accounts payable into this ledger. We'll post individually to the accounts receivable, and we'll post totals into our general. Okay, and we'll make some notes with that as we go through too. Okay, so I want to show you that first, and then we'll start writing things down so that you have them. The first thing I want you to make sure that you remember is that debits equal credits. Okay, debits equal credits for each transaction. Okay, so if I say we make a sale on account, okay, when we're recording that transaction, the debits must equal the credits, and for our journal totals. So when we finish a page, we should, or maybe a half a page depending on what's going on, but when we finish a page of a journal, we need to make sure that all of our debits equal all of our credits. Okay? All right, and then just to go through our very basics, assets equals liability plus owner's equity. Now remember, this must always stay in balance. Okay, that's super important that we focus on that. Okay, and then just to remember, assets, okay, our normal balance side is our debit side, and credit. Remember, this is debit. Debit's on the left, credit's on the right. Y'all remember the song, and you're about to hear it again. Or if you haven't, I'm sure you've already heard it because I'm playing it for Accounting 1. Liabilities, normal balance side is the credit side. Owner's equity, normal balance side is the credit side. Revenue, now remember, right now revenue pretty much for us is sales. So if you want to write that down, you can. And then expenses, remember every expense has a normal balance of a debit. Rent expense, utilities expense, anything that says expense. Okay, assets, cash, that's our big one. Insurance, equipment, liabilities, anything we owe, our accounts payable. Okay, assets, accounts receivable. Revenue is pretty much sales, and then any of our expenses. Okay. All right. So then to again review our journals, we have a purchases journal, a purchase on account. So any purchase on account, okay, that's the key there, on account, goes to the purchases journal. We have a cash payments journal. Hope you don't mind if I abbreviate. PMT, anytime we've paid cash. Sales journal. Sales on account. And again, remember, on account is a keyword. Cash receipts. Receiving cash. So from somebody that owes us money, they're buying something from us. And this includes the credit card cash from sales terminal. which is the cash register. Okay, remember TS, terminal sales, is the abbreviation for that, so that's why I use that verbiage. Okay, and then our journal is anything else. Now I'll tell you, for this reinforcement activity, we're going to use it for sales, returns, and allowances. Okay, that's an account title. And basically when we've made a sale and they're returning it to us because it was damaged, they didn't like it, it was the wrong color, whatever the case may be. And then purchase return and allowance. Again, we made a purchase, we didn't like it, it was the wrong color, we returned it to the company. Okay? And then when we record payroll, we haven't paid it yet, we haven't written the check, but we're recording the payroll. Okay? Not paying it. Because if we pay it, then that's cash payment, right? But this is just recording it. Okay. So what I want to do now is go through, I should have spread that out a little bit more, but some of the transactions that we'll see in this, and just kind of refresh your memory. This, like I said, this is, we're learning a little bit, but we're also reviewing a lot. Okay, so we will have a purchase on account. And when we have a purchase on account, we're going to use the purchase journal. So we'll have a purchases column, and it'll be an accounts payable because we're buying something and we're not paying them yet. Okay, so a purchase on account. Okay, the normal balance is a debit, and for accounts payable, the normal balance is a credit. So for this transaction, our purchase will be increasing and our accounts payable will be increasing. There's our debit, there's our credit. Okay. Then we may return an item. Okay, so we're going to have that, well, let's do this. Return an item, and this is always happening before we actually pay the bill, because it would be different if it were after. But we'll have to use the purchase, and I'm going to abbreviate, return and allowance account. Okay, and the accounts payable, because we're not going to owe them as much. So purchase, return, and allowance, this is a contra to purchases. Okay, so remember, a contra means an opposite. Okay, it's going to be decreasing it. So it's going to be opposite of what that looks like. So this will actually have a credit normal balance. Okay, accounts payable. Okay, so we're going to increase our purchase return because we have to keep track of what we returned, and we are going to decrease what we pay, what we're going to have to pay. So there's our debit and there's our credit. Okay. Now we purchased, maybe we return an item, now we need to pay. Okay, so we're going to pay paid cash on account. Okay, so that of course affects cash. Okay, and it affects accounts payable. So cash, normal balance, debit. Okay, we're paying cash, so we're decreasing our cash. Accounts payable, normal balance, and we are decreasing what we owe. So there's our debit, there's our credit, and they should equal. Okay, then if we have an agreement with the person that we are purchasing this from that we get a discount if we pay it quick, you may have that purchase discount. Okay, so with a purchase discount, okay, this same thing will happen, except that we're not going to have to pay as much cash, and we're going to record that extra in a purchase discount account. And there's a column for that in your journal. Okay, so purchase discount has a credit normal balance. Okay, and we're going to keep track of all the discounts, so we're actually going to increase it. So now when we do this, all of this must equal debits and credits. So this debit should equal these two credits together. Okay, so we just put a note over here. The accounts payable debit equals the cash credit plus the purchase discount credit. Oh, I'm getting a little... Sorry, let me move this way. Better? Okay. All right. So that took us through the purchase, returning, paying, and paying with a discount. Okay, sometimes we pay with a discount, sometimes we don't. So that can vary depending on what information is given to you. Okay? All right, so keep moving on. Now let's look at receiving cash on account. Well, let's see. I wonder why I don't have sales in there first. Yeah, let's do the sale first. So, if we make a sale on account, hopefully I don't confuse myself because I have it different in my notes. We have make a sale on account. Of course, they're going to owe us money, so we're going to include accounts receivable. We're going to include sales, and remember, we're working with those merchandising businesses now. Not the service business like we started with in accounting 1. Okay, so because there's merchandise involved, we have to take care of sales tax. Sales tax payable. Okay, accounts receivable is an asset, so there's normal balance. Sales is revenue. Okay, so this is what it looks like for normal balance. Sales tax payable, anything payable is a liability. Okay, so there's normal balance. When we make a sale on account, we're going to increase our accounts receivable, we're going to increase our sales, and we're going to increase our sales tax payable. So this debit should equal these two credits. Okay, and then same thing. All right, so now we're going to go to receive cash on account. Okay, so we made the sale. Now we're going to receive payment. Receive cash on account. Okay. All right, so we're going to, of course, receive our cash. They aren't going to owe us as much. So those are the two accounts we want to look at. Cash is an asset. Accounts receivable is an asset. We're increasing our cash. We're decreasing what they owe us. There's our debit. There's our credit. And then we can also offer our customers a discount if they pay early. So with the sales discount, okay, that just adds in I kind of wrote that differently. Okay, it adds in this account to this transaction. So now our cash debit and our discount debit should equal our accounts receivable credit. Debits equal credit. Okay, because we have to reduce what they owe us by the full amount, even though we're not receiving all of the cash, because we gave them the discount. Okay, and then same thing with the sales returns and allowance. Again, if they return an item to us, okay, or basically customer makes a return, okay, we'll have to use that sales return and allowance account, okay, and that's a contra to sales, and so it's going to be opposite of sales, okay, so it'll look like this, and then we reduce what they owe us on accounts receivable, okay, so we're increasing the returns and allowance and decreasing what they owe us. And again, we call those contra accounts because they're contra, the opposite of what sales is. They're contra to sales. Okay, and so I can go ahead and mark that these are contra to sales. All right, and then one last is the cash and credit card sales. Okay, and this is coming from the cash register basically, or what they call a terminal sale, or a TS. Okay, and this is going to go in cash receipts. Okay, the cash receipts journal, not the sales journal. Okay, actually we could do that. Cash receipts journal. And we'll have sales. Okay. We will have sales tax payable because we're selling a product. It's a payable. It's a liability. And we'll have our cash because we're receiving our cash. Okay. So our sales are increasing, our payable is increasing, and our cash is increasing. So our 1 debit should equal our 2 credits. Okay. Sales returns and allowance. This is going to go in the general journal. Okay. Sales on account. Of course, that goes in the sales journal. So you have that. And this return will go in general, but everything else will go in your purchases. And there's columns for accounts payable, there's columns for the discount. Okay, so that should really help you get started with your debits and your credits and what journal it goes in. To get you rolling again, thinking about accounting, thinking about all that, the numbers and the transactions. There will also be a couple of payroll that I want you to do. Again, just as a review. So I'm going to give you this handout again. I gave it to you back in Accounting 1. All right. When we actually pay payroll, this is what it looks like. When we pay tax liability, this is what it looks like. When we pay FUTA or SUTA, this is what it looks like. Okay. Now there could be other things here like health insurance, United Way, right? You remember all that from Authentic Threads. Okay, so there may be other things in there. Okay, and this is in cash payments. And then sometimes it'll just tell us to record the employer taxes. Okay, remember there's 4 taxes that the employer pays. And so when we're recording that, that just goes in the general journal. We pay them later, okay, but right now we're just recording it. All right, so you've got that. You've got those notes to help you through the payroll part. Okay. All right, then once you finish journalizing everything, I'm going to give you instructions on which transactions I want you to do, because we're not going to do every transaction for that reinforcement problem. Okay. So of course, first thing we're going to do is analyze our transactions and journalize them. Okay. Once we finish journalizing, we want to post. Okay. And remember, we want to post individually first. Okay. Anything that needs to be posted individually. That's going to be anything in our general journal, any accounts payable, any accounts receivable. They need to go into their special ledgers. Okay. I think that's it. I'll have to correct myself if I'm wrong. And then we'll post totals. Okay. So you post a total for sales, a total for accounts payable, a total for accounts receivable, a total for the discounts, a total for the returns and allowances, all that good stuff. Okay? And you do need to go ahead and prove your journals to make sure that your debits equal your credits. Okay? So hopefully, again, that's some information to help you get going on this. And like I said, feel free to ask questions. This is to give, like I said, give you the background and the notes that you need. But you definitely are not on your own. Okay? I'm right here to help you through it. Okay? That's my job. All right. Thank you.